Okay.
BItfinex, Binance. I know we've been talking behind the scenes as well. There's a lot of evidence coming out. And before I get into that, actually, I just wanted to say, because we actually have the video interview we did together when we were in London together, absolute pleasure. And even before that, Dmitry, I've got you on record saying, I'm not so certain about what's going on with Tether, etc. You were already very, very alert to the red flags. In fact, I remember when we met you originally in Guildford, Chris and we had some lunch and we were discussing the crypto area. Even back then, you were talking about, you had a lot of red flags with these exchanges behind the scenes that people weren't aware of. And I just couldn't wait to start getting that content out, which we did just in time, because from what I can see going on right now, you were right. There's a lot of dodgy crap going on. Can you guys talk a little bit about, and I know we got Obi here as well. Can you guys please talk about what is the state of this market right now with Tether, BitFinex? What is going on here? Because it's crazy.
Well, so obviously, if you have, so what's Tether? So this is a sort of token. It's a traditional token. It's on Bitcoin blockchain, but it's a token. So Tether has the key which allows them to basically create the tokens. So Tether as a company. So then the idea of the token, it is backed one-to-one with the real dollars. But the key which can issue the tokens or create the tokens, you control this key. So what will you do? So we will obviously issue more. So that's just out of question. So you can start with being very fair and transparent, but eventually we will issue some tokens. that's just.
Do you mean issue tokens? Nature. Do you mean like in a quantitative easing situation, or do you mean like in other words just create tokens, or are we talking about issuing tokens and they're still backed by the US dollar in terms of we have the liquidity and the reserves there to support the amount of Tether being issued? Are we saying that Tether's being issued without the dollar backing?
Exactly, because you can just issue, and right. But that's not just Tether, because that's the whole infrastructure. That's BitFinex and Binance are parts of this infrastructure, because basically Bitcoin is an asset, right. So it's tradable for US dollars. That's clear, but then it's also tradable on the platforms like Binance. It's tradable for USDT, for Tethers, for the tokens. Mm. Guess what? So if you print these tokens, create these tokens, you can influence the market, the whole market of Bitcoin. So you can pump the Bitcoin price, and then you can sell Bitcoin for real dollars. Then you can get the real dollars, and this real dollars will back the tokens you've created eventually, or not.
And I guess the hope is if you're selling these tokens, you might be selling them for the sum of what, $850 million?
Yeah.
You know?
Yeah, but the thing is that it's not the first time they create these tokens in big quantities. So the first time was in 2017, obviously, when the pump happened. So what we see now, what we see in the whole story is that they're doing this again to cover the loss of the money, and the loss of the money was due to the partnership with the dodgy payment provider, or a company which does the payments and the banking, manage the banking relationships. So, and then it goes further. So why did they need this company? They needed this company because the normal banks they terminated their account. Why the normal banks terminated their accounts? Because they were not transparent and they didn't do the proper KYC AML. So we're going back. It's a circle.
Right. So if they had the KYC and the AML set up, regulated, structured, reviewed, audited, they probably never would have lost the funds in the first place.
Yes.
Which is why you're so, for the Crix, I know I don't want to take it back to Crix too much, but it's relevant for Crix. That's why you're so focused on the AML as well.
Yeah, absolutely. Yeah.
I mean, Obi, I got to ask you as well, because I know on LinkedIn, and by the way, out of everyone in crypto, I think Obi's LinkedIn is my favorite. You have some opinions and views in this market as well, Obi. What are your thoughts as to what's happening here and what we should expect to come up next?
Well, my view is that the ICO market really, and the ICO model was quite genius, really. Every man and woman was allowed to invest $1 into a startup, and things like that never happened before. I mean, you, me, everybody on this call could gamble at a casino. We could sports bet. But for the first time, we could put $1 into a startup which had a growth potential. So I believe in the ICO model. However, obviously after 2017, look what happens to a market or a so-called playground which has no rules. And with a playground with no rules, people manipulate, people take advantage, people obviously don't really care for one another. And what we're seeing now is obviously things are maturing, regulations maturing, obviously investment is maturing, investors are becoming more educated in these instruments. So all I'm saying is I would love to keep the model that everyone could invest their dollar in their pocket. And what's prohibiting this is the accreditation and sophisticated laws. They were put in place to keep the rich rich. And this is still a problem because when you come to the world of security tokens, you have to be a sophisticated or accredited investor to be able to invest in some of these products. Obviously, every man and woman technically doesn't have access to these startups. So what's happening is there still is a gap between two kind of worlds in the ICO market and the STO market. So I'm waiting for somebody to crack the opportunity where the average middle class, let's go back to your say, the single mother can put her $10 into a startup rather than put it on a casino table, you know? So it's interesting. There's lots of things going on. I mean, my LinkedIn, I am quite controversial. I like to get conversations started. And my last kind of thought was on the IEO process, the initial exchange offerings, how pretty much a perfect example of how exchanges can make more money. Insider trading happens, and it's dangerous. I've seen, I think Fetch AI raise capital in 7 milliseconds. And within 7 milliseconds, I think the value of their token dropped 60% as soon as it hit a public exchange.
How much did they raise? We lost you just at that point when you said how much they raised. What was the value?
Oh, Fetch, I don't know the perfect number. And
okay.
I don't really want to say, but you know, all these projects are raising, as we said earlier, millions. More capital than they should have.
Right.
So yeah, my view is things need to still mature. I work hard educating families on the alternative asset side. They must diverse their portfolio strategy. They must have a larger allocation of their portfolio towards technology. A lot of families and family offices we work with, they predominantly hold real estate and land, and they must now, as we have a so-called recession ahead of us, they must have some type of recession-free products, which we see as technology. So my overall thing is that things still need to mature. And as Dmitry and Nick says, we still need regulation to mature, investors, projects to mature. And hey, I'm a big believer in crypto, and I think we've still got a good learning curve ahead of us.
Yeah, no, very well said. Very well said. I'm going to come back to you in a second on the point on IEOs, by the way, because this is something that I know Dmitry and Nick mentioned as well in a prior interview, and it was very, very interesting. The whole IEO setup to me, just I don't understand how you can't question any. Again. Yeah, it's just another way to basically take people's money. That's how it feels to me.
Absolutely, it's a gamble.
Generally.
Sean, it's even more scammy in a sense or scammy, whatever you want to call it, because what tends to happen is that, you know, you have a project team which think that they can get access to capital. Yes, they can. You have an exchange, and there's lots of them out there trying to do it, that will influence their community to buy these tokens. and the exchange is probably creating the hype. They're probably shorting it badly, and of course it all launches, lots of money piles in, and then as Obi said, the tokens, don't perform so well, and it's the small investors, the retail investors on these unregulated exchanges that pay the bill. But that's going on nearly every large exchange.
I mean, we're talking Binance as well. And by the way, I'm mentioning Binance a lot because myself, like many other people, there's some things that have come up that have really made me question Binance. And I'm not here to throw Binance under the bus, but I just want to talk some facts that worry me. And I want to get your guys' opinion on it. Again, because most of my crypto holding is actually being done through Binance, and I'm not the only one. So when I look at Binance, number one, they're one of the largest holders of and distributors of Tether out there, number one. They're not impartial to the whole IEO process, as we know, number two. And we also know, I think in some of the, the content that I know you've reviewed and you sent to me as well to review is very interesting. The leadership of Binance are, they've been very closely involved with leaders like, the BItfinex leadership team, et cetera, as well. So there's a whole circle there, not only in terms of structure that concerns me, but it's also the actions that concern me. We have a lot of Tether being pumped out on Binance, and we have these IEOs as well. What is going to happen here in your guys' view? Is this a house of cards, or are Binance legit and they just need to straighten some things out? What's going to happen with players like that?
I mean, Sean, ask yourself where they're incorporated. I don't think anybody knows.
I don't know where they're incorporated.
Where do the management team base themselves? Probably China. Who knows? And that's the problem, is that what Dmitry and I will tell you is that when you look at the big exchanges and you try and see who's behind it, you don't know their address, you can't see the management team, they don't publish much, and they seem to be operating virtually, thinking they're beyond the extradition laws or the long arm of the law generally. So even at a basic, fundamental business, who are these people? How do they operate? What's the governance of the business? Who are the stockholders? How do they report their performance? None of that's available. And I think when you look at the pump and dump and the accusations coming out from, Craig and the battles that he's having with CZ now in terms of, delisting, SV and all of that, it's this kind of, and it's all over. Everyone's getting involved. And I think some of the evidence and the truth and some of the behaviors are now being exposed, and it is unnerving people.
I think it's bad for the whole market.
Of course, yeah. So answering your question on what will happen next. So what will happen next is that Tether will not be able to fulfill its obligations. So if basically people start claiming their money back, they won't be able to fulfill that. So that's the first thing. And the second thing, that eventually Binance will be closed, will be shut down, because the problems they have are not solvable, as I see, because there are so many. So they do this, all this pumps and dumps. They do this all this wash trades. They trade shit coins. They have substantial user base without the proper KYC. They don't do any AML and stuff like that, so on and so forth. So it cannot be solved because too much has been done already.
It feels like to me we should be expecting some serious turmoil in this market, some serious downturn while these things correct themselves, because they need to be corrected. For me, just in principle, anything that's true and honest should survive a longer period of time than anything that's built on a house of cards. And my takeaway, and I've been fortunate because I've got to speak with you guys a lot behind the scenes, and I've had a heads up to a lot of this stuff. My takeaway from this is there's a lot of massive infrastructures in the crypto community right now that are built on a house of cards. And just like we're expecting another global recession, I feel like we should expect this house of cards as well to fall over, before it gets much better. That's kind of what it feels like.
Yeah, but if you look at the history of Bitcoin, so there were the cases. So it was Mt. Gox, there was BTC, and actually Binance is not the largest player because obviously their volumes are pumped and not real. So they are big, of course, but not the largest. So if they go away, yeah, obviously there will be some because there will be problems with liquidity. So some people will lose their assets, stuff like that. But I don't think it'll kill the industry.
Right.
As previous cases with BTC actually were quite unnoticed by the industry. Mt. Gox obviously was important, but it didn't kill the kill Bitcoin, right? That was so a lot of people lost their money, but otherwise the market has recovered.
Right.
And Mt. Gox,
and it's better for it as well, I guess. You know, when we feel that short-term pain of something going wrong in human nature, we look for ways to safeguard that from happening again, right? So it should actually help the industry longer term. But we do need these establishments that aren't operating above board to correct themselves. I don't know when that time bomb's going to go off, but my feeling from YouTube and the content that's going out on a regular basis now is we're not going to be waiting that long.
I think it's going to be second wave, Sean. I mean, the thing is that we, you know, our whole ethos of Crix and our other exchanges get it right first time and set it up with the regulatory wrapper, the legal wrappers in mind day one.
Right.
So what's going to drive, you know, Binance and some of these others into the corner is that their users will start abandoning them because they will start moving to exchanges and means of trading which are, you know, more transparent, more trusted, and will have longevity. As soon as, I mean, all of the exchanges, bar none, have got subpoenas from the SEC. You know, the SEC is starting to ask questions. You know, the thing about Tether was actually New York. And New York has been very, very tough to get any sort of license to operate in New York. I mean, if you think about some of the, you know, the early, you know, Bitcoin exchanges got raided day one almost. But I do think that it's public confidence. The trading community, you know, the quants, the traders, the institutions that are moving into this, you know, they want to see longevity. So therefore, they're going to look for things done properly. You know, who are the management team, where they're incorporated, how do they report? And then, but beyond that, again, treasury. How liquid is the market? What is the true position on the market? You know, how many trades are they really settling? You know, where are the assets custodied? Who's monitoring and looking after them? How is the key management done? How is the cold and hot wallet management done? You know, what's the underlying processes of that exchange to make sure security is at its highest, that we know who the good actors and the bad actors are, that we can identify front running, pump and dump. So you know, where we're going is more traditional. And I hate to say this because I don't like traditional capital markets and banking. I just don't think it delivers for us, the people. But having said that, though, they do have checks and balances that there's a high degree of protection. Now, you can argue the regulators were asleep at the wheel in 2008 and they were knowingly concerned and all of that. But ultimately, not everyone was like that. And there are some people trying to do the right thing. So even down to our exchange, we do have transaction monitoring tools deployed. You know, we are looking for bad trades, bad actors. We are applying the rules. We're managing treasury, and we're focusing on liquidity and settlement. And you know, those are the important things. And I think when the traders understand there are exchanges like ours and others trying to do things more, you know, more traditionally in a sense, that should give confidence to the market. Whereas Binance and the others, it's just too. Nobody really knows what's going on in those companies. Not at all.
Oh, totally. And I think you're right. Not only would that give confidence, but, you know, when I think about this whole stable coin thing in principle, actually what we need rather than a stable coin is just a very, very easy way to transact in and out of fiat currency. You know, we just need a solid fiat gateway. I know you guys are very focused on the fiat gateway on Crix. But, you know, why do we need a stable coin if we make it easier to transact directly to fiat currency?
Well, look, I mean, my argument is yeah, stable coins are quite useful, but why have it in fiat? Because all fiat currencies go to zero and, you know, they lose value quicker than everything else. If you throw inflation into the mix,
yeah,
do fiat currencies have a role? Why don't we have stable coins which are linked to other things of intrinsic value, other precious metals and other assets?
Right.
You know, technically a stable coin can also be a hedge instrument.
Right.
So, you know, that's the way we see. You have a stable coin linked to gold. It could be a natural hedge instrument. So as recession approaches, what happens to gold traditionally? It normally pumps. So therefore, you know, you've got some offset, and other precious metals and other assets also pump in times of recession. So stable coins, I mean, I personally struggle with the use case. Why would you want to sell dollar? I mean,
you're right, because actually the opportunities, I mean, I could throw them off the top of my head. I mean, you mentioned precious metals. There's also real estate, you know, something that's fixed in place that hasn't moved much in value, or whatever it is. There's so many options where you could actually tie that crypto to something other than fiat. It's a really, really good point.
Well, yeah, I mean, look, stablecoin. I mean, you know, we're working with companies with holding groups, which is quite interesting. So they want to create a security token at the top co, which is linked to the performance of all of the different companies in the group.
Right.
But in a sense, that's a natural hedge, because some of the companies in the group can be recession proof, and some others may be vulnerable to recession, like marketing, retail, things like that. Manufacturing is generally vulnerable to recession, but there are other businesses that are recession proof. Real estate is very open to recession, and we're looking at, you know, a big correction in the market, but people who are in real estate look at the 10-20 year cycle.
Right.
You're not in real estate for, you know, for the short-term view. So, you know, it's all about the mix, isn't it? If we want stability of, you know, crypto is becoming stable. Why is that? Well, I would argue that it's a lot of the bots and the day traders and the short-term horizon traders that are pumping the volume of short-termism, but in a sense, it's keeping the market trading within bands rather than these enormous spikes and drops. Now, we've seen a few recently, and that's normally on bad news. But actually, if you think about what's happening, is our market's being driven by short-term horizon. So you have stable coins linked to assets with have a long-term horizon. We can start doing some very interesting things and using stable coins and security tokens as hedge instruments as well. And
I think you guys should come up with a stable coin, Nick. I think you should be the first. I'm just saying.
Yeah, well, you know, we've got some ideas.
I think you should, because that makes a lot of sense. And actually my heart is with the traders, because I love that community. I love trading. I don't trade for a living at all. I'm not a trader, and I tell my community that. But I just love that market and that community, because they've been here since day one. I think a lot of people got a big drug high from, you know, cryptocurrency prices absolutely blowing up back in December 2017. And what happened is a lot of those people then became traders. They wanted more of that hit, and they wanted to learn and understand trading. So we actually had a lot of retail people, smaller traders, you know, getting educated in this market space. And now what I've seen happening with them is they've been educated with a lot of BS out there on YouTube and other platforms. And they're starting to learn what doesn't work. And they're starting to see that regulation is actually really important. So it's almost like we've gone back in time with crypto, and we've just built an entirely new market, and all these traders are sort of coming in now, and they're learning on that journey as the market evolves. And I think these guys are going to be, guys and girls, they're going to be super advanced, you know. So
look, if we don't get our house in order, as Dmitry said, we're in first wave really. This market's going to take a while for the infrastructure to bed down to regulation. And for the community to because, you know, it's really weird, isn't it? Because Bitcoin is meant to create trust, because there's no trust. It's an economically neutral incentive model around the way decentralized computing works. You know, you get trust because there is no trust. But actually, I think driven by social media and everyone piling in who have no clue, actually, I think this community is in a bad place right now. I think there's a lot of chatter, a lot of hate, a lot of unhappy people. A lot of people have lost money. A lot of people have made money, probably unfairly. And I think there's too much talk going on, and not a lot of it's useful. Not a lot of it's helpful.
I agree. I mean, on the social media side, it's diabolical right now.
Yeah, I can imagine.
Yeah, it is. I'm telling you, it's absolutely diabolical. I know in one of the most popular groups on Facebook, I did a post just asking people to talk about their business in crypto. Talk about it. What are you doing? What problem are you solving? And all people did was just spam links to ICOs. I mean, no wonder the market is going deaf to this stuff right now. You know, people's communication is just crap. on social media as well. So I think that's got to play a part too. I think the natural value channels are going to start showing themselves as well. We need the right education channels to, we need to be working with the right projects and seeing those succeed. And actually, I'm seeing a lot of that on the business to business side as well. People that are building blockchain solutions, they're building them on top of, Hyperledger Fabric, et cetera, as well. These are real businesses, and we need to see that actually taking form and adding value where, like you said, Nick, people aren't making money unfairly. It's a level playing field, and the retail traders are also seeing results, or they're also making money.
But Sean, outside trading and outside this conversation about crypto infrastructure, blockchain is being deployed en masse as a legitimate technology.
Totally.
It is. It's a great fit in banking and supply chain and healthcare and what have you, because of the underlying attributes of the technology. Where we're getting ourselves in a muddle is you always get bad actors, and you always get, as the markets emerge, it is the Wild West. I mean, in the early days of the internet, the same thing happened. There was a lot of, businesses, fake businesses, dummy businesses that would, steal your credit card information. You'd order some stuff and it never arrives, So we shouldn't be surprised here, but we do need to be sorting our own house out here. Because what we're doing is, there is a lot of nervous people out there. The regulators are nervous. The people in power, the 1% of the world are a little bit nervous. If you think about where geopolitics is right now, the Brexit fiasco. The interesting thing for me is the dual party, political process is now being challenged. Now, nobody expected that at the beginning. And we were talking about this last night, is, the dual party, the nature of the political system. And I was talking to my American colleagues, and I said, look, Labour and the Conservative Party is going to be challenged, and we're going to see a sea change, in my view. Republicans and Democrats are going to be next, because soon as somebody breaks the mold, soon as the political and democratic system either fails or is challenged by the people, Arab Spring, you can argue whether that was a politically motivated thing from the power brokers, because it was all about resources at the end of the world, at the end of the day. But if you think about where we're going with some of this stuff, the geopolitical, things that are going on, and Parliament is being challenged. Yeah, this, for me, I think it's a good thing. I think people are waking up, wising up. And if we can get them to look at, crypto as an alternative system for doing things differently, then that's a good thing. Because at the end of the day, we have to drive adoption. But we're not going to get adoption if we come across as a community as a bunch of scammers, a bunch of haters online, and a whole bunch of people that are not prepared to police and get our own house in order. We're making it harder for ourselves.
And that makes sense. So let me ask you guys one more question on that actual point. What needs to be the main focus and trigger for everybody in this community? Should we be self-regulating? Is that the real message here? Is focus on self-regulation? How can we change our mindset from being so negative and from all these dodgy and corrupt activities happening like we've spoken about today? Is self-regulation and having that mindset and culture the way forward? Is that what's going to set this industry to go forward?
Yes, of course, because actually, Bitcoin is self-regulated, sort of, but it has much more technology allowing the self-regulation than is used. So there are enormous room for self-regulation embedded into blockchain technology. So it just has to be used, and that's it.
And when you say it's not used, do you mean it's a protocol and other applications are not being built on top of it and making full use of it?
Sure, it's not being used because people can do some interesting things when you're not using it. There's lots of wiggle room.
It's very simple. So you can trace in Bitcoin, you can trace every coin, every Satoshi. You can be traced to the Genesis block, right? So if there were the self-regulation, so for instance, the money stolen from Mt. Gox or whatever, or other exchanges, so the community can stop this spending this money, actually, because the wallets are known. So if every exchange and every wallet provider and every company in the infrastructure space sets the ban on using these coins, they won't be used. So we know.
Which makes stealing them obsolete.
Yeah, exactly.
Wow, I never thought of it like that.
But it requires sort of self-regulations, the governance on top of that.
So we're not just talking about self-regulation in terms of external governance. You're talking in terms of the technology stack as well. Regulation, self-regulation built into the actual infrastructure of these solutions.
But that's the whole point of, you know, the blockchain is the level of consensus, and to be able to change things and enforce change requires a community to make a decision.
Right.
What Dmitry's saying is that the underlying tech, it suits certain bad actors to not use the full implementation of the technology. And this is what we're saying is all the tools are there to be used. And this is in a sense where we get through to the other argument that Ethereum is often not the best partner to use for creating asset-backed tokens, because it's a different type of protocol.
Right.
But whereas the Bitcoin-based protocols, you know, that it is 100%, you know, enables you to self-regulate and therefore self-govern. You know, the rules can be deployed where it's very difficult to frig the system.
That's so interesting. And I've been in this space a long time, and that's only really clicked for me now. Fascinating. Gents, I just wanted to say thank you very much for taking the time today to have this discussion. It's been, as always, it's been absolutely fascinating listening to you and following you on your journey. And, you know, for anyone watching this, what I would say has been very evident to me is listen to what these guys are saying, because they're calling things out before they happen. This happened 3 months ago with Dmitry, and we were having the discussion with Stablecoins. BItfinex. It was, yeah. You know, we've been aware of this a long time, and, you know, it's very, very interesting. I know you guys have a lot of people contacting you anyway, but if you do have anything genuine that you want to have a discussion on with the folks here, definitely hit them up here on LinkedIn, or if you're on YouTube watching this, please comment what your interests are, what you're looking for more of, and what you'd like to know more about. But gentlemen, thank you very much for your time, and I'm looking forward to doing more videos with you.
Thank you. Bye.
Thank you.